Hi, everybody. I'm Lauren Underwood, and I have the honor of representing Illinois' 14th Congressional District. I know that I join you at a time when restaurants and other small businesses have been devastated by the pandemic. Many businesses across our district are fighting to stay afloat while also providing essential services that are keeping our community running. As you know, in March, the Congress passed the American Rescue Plan. The American Rescue Plan is delivering relief for small businesses and communities across the nation. It provides $50 billion for new and existing small business relief programs, and it created a $29 billion restaurant revitalization fund for hard hit restaurants and bars. The Small Business Administration opened applications for this program on May 3rd. And today, SBA's Bo Steiner is here to share important information about how businesses can apply. I know that much of this funding is needed in communities across our district. Over the past year, I've heard from business owners who closed their doors permanently or are on the verge of closure. I've heard from business owners who burned through their savings and used the equity in their homes to keep their employees on payroll and serve their customers for one more day. People are doing everything that they can, and they deserve the help that they need to get to the other side of the pandemic. Now, just a few weeks ago, I hosted a roundtable of restaurant owners across our district. Each restaurant owner shared their experiences, struggles, and triumphs throughout this past year. I know that everyone that joined this workshop has gone through so much over the past year. And I want you to know that I hear you, I see you, and I'm fighting for you every day. I remain focused on ensuring that our community is making, that our community has the resources that it needs to build back stronger than ever. One of my highest priorities in this pandemic is making sure families can afford the healthcare that they need. I'm glad to share that my legislation, the Healthcare Affordability Act, passed as part of the American Rescue Plan. This legislation makes out-of-pocket premiums for health plans sold through healthcare.gov more affordable than ever. People who didn't previously qualify for tax credits to lower their premium costs will now qualify, and 4 out of 5 enrollees can get a plan for less than $10 a month. Visit healthcare.gov to see what options may be available to your family. My team and I, we remain committed to ensuring that you're treated fairly by federal programs. If we can help, please reach out. If you have issues with agencies like the Small Business Administration, the IRS, and others, been able to help constituents with both PPP and EIDL fraud and delayed funding, and recovered over $700,000 in the 14th district. So thank you to everything that you and your staff in the restaurant industry have done over the past year. I know it hasn't been easy. You're part of what makes our community so special and why so many of our constituents are proud to call the 14th District home. Now I'd like to hand it over to Bo Steiner, the District Director of the Illinois Small Business Administration Office, to give you a more in-depth look of the SBA programs and answer any questions that you have. Hi, Bo. It's good to see you.
Congresswoman Underwood, thank you for having me today. I really appreciate it.
Yes, sir.
Well, thank you again for having me. Thank you again for having me today here to talk about the Restaurant Revitalization Fund. As Congresswoman Underwood mentioned, the program opened for application yesterday, so we wanted to share all the information that you need as a potential applicant to get through the process, understand the eligibility, and really all the ins and outs of the program. So I'm excited to share a little bit of information with you today and look forward to answering any of the questions that you may have as we go through this program. If we go to the next slide, please. So the Restaurant Revitalization Fund was passed as part of the American Rescue Plan Act, which became law on March 11, 2021, and was appropriated at $28.6 billion. As we implement the program, we're going to keep applications open for as long as we have funds available. And one of the really interesting aspects of the program is the long time horizon within which you can use the funds through this program. You can actually look back and look at eligible expenses that you've incurred going all the way back to February 15th of 2020, and then use the funds on those expenses and any new expenses you incur all the way up to March 11th of 2023. So really a long runway to use these funds. Next slide, please. And while it's called the Restaurant Revitalization Fund, it really supports a whole host of various types of businesses that are out there. Of course, restaurants, but also food trucks and food stands, caterers, bars, saloons, snack bars, so like a coffee shop or ice cream shops, bakeries, brew pubs, breweries, wineries and distilleries, even inns. So really anywhere where the public or patrons assemble for the primary purpose of being served food and drink are eligible for this program. So really expansive and inclusive in the audience that it serves. Next slide, please. There are some ineligible organizations that you need to be aware of, state or local government operated businesses. If you have 20 or more if you have more than 20 locations, if you've applied for and or received a shuttered venue operators grant, you're a publicly traded company, you're permanently closed, or you're a nonprofit, you are not eligible for this program. Next slide. Here's the good news. As an eligible entity, you may be provided funding of up to $5 million per location, not to exceed $10 million for the applicant and any affiliated businesses. So again, it's a very large number per location, but we have, Congress did limit it, make sure that the funding went as far as possible to as many businesses that need the assistance as is possible. And the minimum award is $1,000. Now, there were some rumors that you had to register for a DUNS number, you had to register in the System for Award Management at sam.gov in order to participate in the RRF. That's not actually the case. Congress allowed us to use the types of identifiers that you as a business already use. So it might be your social security number as a sole proprietor, it might be an employer ID number, it might be a valid unexpired ITIN. All of those are acceptable forms of identification for your business entity as you apply for the RRF. Next slide. And really, almost any type of business organization is eligible. You have corporations, partnerships, sole proprietors and self-employed, tribal businesses, LLCs, really inclusive as to how your organization is structured, so long as that you are for-profit and meet all of the other eligibility criteria. Franchises are also eligible, which is great news. We have a lot of small business owners that own franchises who would fit into this program. Key element you need to be mindful of here is that your franchise is on SBA's franchise directory. You can find the franchise directory at sba.gov, and you can identify whether you might fit into that bucket. If your franchise is not on that directory, you can always ask your franchisor to contact the SBA to see if that franchise may be able to be included in that franchise directory. Next slide. Bankruptcy, another common question that we've had throughout the CARES Act programs, the Economic Aid Act programs. So you are eligible to participate in RRF if you are in Chapter 11, 12, or 13 and on an approved plan for reorganization. However, if you are permanently closed, you filed Chapter 7 liquidation bankruptcy, or you filed for a Chapter 7, Chapter 11, 12, or 13 bankruptcy, but not under an approved plan, you are not eligible to participate. And when we talk about permanently closed, that means that you've closed your doors forever. If you closed due to the capacity constraints that were in place to prevent the spread of COVID-19, and you're planning to reopen, you are not disqualified from this program. And there are some interactions you need to be aware of with other SBA relief programs, most specifically the Paycheck Protection Program. So we're going to use if you did receive a Paycheck Protection Program, we're going to use some of the information you provided through that program to support verification and validation for the RRF. And again, that's going to relate back to the EIN, ITIN, or Social Security number that was associated to those PPP loans. If you received a PPP loan, we want you to use the same tax ID number for your RRF application as you used in your first draw PPP application, okay? If you applied for a first draw PPP under a parent EIN or tax ID number, but then the second draw you used individual EINs for each of your locations. What we're asking you to do is still apply through that first draw tax identification number, and then subsequently for each of the subsidiaries, you include that in your RRF application. So we're able to account for all of those PPP loans that you've received. And also notable, you want to withdraw any outstanding PPP applications if you are applying for the RRF, because there can be some conflicts, because we are going to subtract out any PPP loans. And if it's in process, it's hard for us to know exactly what you're going to be approved for. And that could cause your application for the RRF to be slowed down. And again, you can't have received or applied for the Shuttered Venue Operators Grant to be eligible. Go ahead. You're also going to certify that current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. Very much like what you certified for the Paycheck Protection Program, for the Economic Injury Disaster Loan Program. So what are the eligible uses of funds? And one thing that I want to note here is that the RRF is not a loan. It is a cash payment to you as a business owner that does not have to be repaid so long as it's used within the program constraints. And the business expenses that you can use these funds for is fairly expansive. Everything from payroll costs, utilities, maintenance, operating expenses, supplier costs, food and beverage expenses, really a broad range of those types of expenses that you need to incur to operate your business on a day-to-day basis. You can also pay business debt, whether it's a mortgage interest or potentially a term loan that you have in place. And it's not just the interest, it's principal and interest that you can make payments with RRF funds. The one qualifier as it relates to business debt is you cannot prepay principal and interest. So if you have a term loan out there, you cannot use the RRF funds to pay off that loan in its entirety. You can just use it to pay those ongoing installments against that loan. You can also use the funds on limited construction expenses. Specifically, you can use it for the construction of or expansion of outdoor seating. Again, this is in response to what many of these types of venues did in order to expand their capacity by increasing that outdoor seating space. You cannot use it for other expansion costs. So you can't expand your indoor space, you can't open a new location, you can't build a drive-through. It's only for the construction of outdoor seating space. And as I mentioned earlier, you have a pretty big window within which to use these funds. You can, again, use these funds on expenses that you've incurred going all the way back to February 15th of 2020. And then on any newly incurred expenses all the way through March 11th, 2023. And really that's what's considered your covered period. So if you remember with the PPP, you had an 8 to 24 week covered period. In this case, it's February 15th, 2020 to March 11th, 2023. Now, if your business permanently closes after receiving the funds, your covered period will end when the business permanently closes. And once you hit the end of that covered period, any funds remaining that haven't been expended on eligible expenses must be returned to the government. Now, again, this is not a loan. We are not expecting you to repay the funds so long as you use it in accordance with those appropriate use of the proceeds. So, if you were to use all the funds and then at some point prior to March 11th of 2023, you ended up closing permanently, we're not expecting you to repay those funds. Again, as long as you use them appropriately while you're open, you should be good to go. Next slide. You will have to do some reporting. I'm not going to go too much into it, but once you've exhausted all the funds, you will provide a detailed expenditure report and certification as a final use of funds assessment. And before you exhaust the funds, you will need to provide documentation annually on what you're using the funds for. We'll provide more information on this in the coming weeks. So let's talk a little bit about how we calculate these funding amounts. The first case would be for applicants who are in operation prior to or on January 1st, 2019. So I was in business all of 2019. Your calculation is really straightforward. You're going to take your 2019 gross receipts, you're going to subtract out any 2020 gross receipts minus PPP loan amounts. That's your funding amount. And I want to remind you that any of those PPP loan amounts that are subtracted out, that's first or second draw, 2020, 2021, any increases, they're going to be subtracted out. It is the loan amount, it's not your forgiveness amount. So if you receive forgiveness for some amount less than the loan amount, it doesn't matter. We're going to look at the overall loan amount to be subtracted out. Next slide. All right, so the second calculation is for those applicants who began operations partway through 2019. So you don't have a full year of gross receipts to demonstrate for the purposes of your funding calculation. In this case, you're going to take your average 2019 monthly gross receipts, multiply it times 12, subtract out your 2020 gross receipts, and subtract out any PPP loan amounts. So the example that I like to give is if I was in business only part of 2019, I was in business for 2.5 months. My gross receipts were $25,000, which means that my average monthly gross receipts for the period that I was open is $10,000. I multiplied that times 12, that's $120,000. That is my 2019 gross receipts amount. And then I'll subtract out the 2020 and the PPP loan amounts. So that's how you're gonna do that calculation if you use calculation 2. Note that you can use calculation 3 as well if you find yourself in a situation where that is more beneficial, and it may be. You're going to want to run both the calculations to see what is best for you and your business. Next slide. Now, calculation 3 is really interesting because it's looking at those businesses that began operations on or between January 1st, 2020 and March 10th of 2021. So that's a big difference, first off, because this is the first program for businesses that have opened or started operations after February 15th, 2020, basically after the onset of the coronavirus pandemic. This also applies to applicants who haven't opened yet but have incurred eligible expenses as of March 11th, 2021. So again, this is intended to offset those expenses that you've incurred preparing to open your business. Calculation's much different. You're going to look at the total amount you spent on eligible expenses between February 15, 2020 and March 11, 2021. Subtract out any 2020 and 2021 gross receipts and subtract out any PPP loan amounts, and that will be your award. Again, if you're open only partially in 2019, you may also opt to use this calculation as well. There is a calculation 4. It's not in our slide deck here, but what it is a kind of a combination of the 3. So if I'm a applicant business, I have 3 different locations. I opened one in 2016. I opened the second partway through 2019, and I opened the third in July of 2020. You can see that you've got one location that meets each of the criteria. There is a kind of a combined calculation that takes that into account and allows you to account for each one of those entities in a unique fashion that's appropriate to the calculations that I've laid out here. Next slide. Now, when you look at the 2020 gross receipts, there's a lot of stuff that you can exclude related to financial assistance that you may have received in 2020. That includes any PPP loans that you received, any Section 1112 payments, and these were the debt relief payments that SBA made on your behalf if you had a 7A, 504, or microloan. Any economic injury disaster loan, economic injury disaster loan advances, targeted idle advances can be excluded from your 2020 gross receipts. Any state and local business grants. So again, anything you got from the state of Illinois, maybe your local government offered grants, they can be excluded, as well as Randolph-Shepard Act financial relief and restoration payments. I know many restaurants received funds through the state's big grants. That really qualifies for exclusion through two of these bullets, both from they were funded through the CARES Act and it's a state grant. So you can exclude those funds as well. Next slide, please. All right, so let's talk about how do I apply. There's really three methods to go through and apply. First is directly through SBA at our portal at restaurants.sba.gov. This portal opened yesterday at 11 a.m. Central Time, and it's a fairly straightforward application. What you're going to need to do if you want to apply through restaurants.sba.gov is number one, you have to register for an account. What that requires is that you have an email address and a phone, because we will use two-factor authentication to establish that account. Once you've established that account, you can go ahead and go in and apply. You also may be able to apply through your point of sale vendor. We have a couple that are actively participating in the program by allowing businesses to apply through their system. So you may want to look at your point of sale vendor to determine if they are supporting that, and if so, if that's the direction you can go. Even if your point of sale vendor does allow you to apply through them, you can still go through restaurants.sba.gov. Totally up to you. Third application option is by telephone at 844-279-8898, where a person on the other end of the line will take down your application. They'll send you a paper copy. We'll ask you to sign it and notarize it and provide your supplemental documentation, return that to SBA, and then we'll process that in the order that we receive it. It's probably not the quickest pathway to apply for the program. Options 1 and 2 will be be quicker, but it is an option for you if you don't have access to the internet or you prefer to use the telephonic method. So you will need to provide documentation as you apply. The application you will complete. If you complete it online, it'll be all digital. You won't print the form out and then upload it. You'll just fill it out digitally. The 4506T tax transcript request will also need you to fill that out. Again, if you go through SBA's grant platform, you'll fill it out electronically. You'll sign it electronically. Gross receipts documentation, depending on your calculation, we're asking for different types of documentation to support your application. Big thing here I'd say is if you haven't applied yet, go to SBA's website at sba.gov/restaurants, download the application form, and fill it out before you go into the SBA's portal to fill out your application online. This way, you'll know exactly what you're going to put in each field in that application. You're going to know how you want to answer each question. It'll just really streamline that process for you. And it's also going to show you what documentation you need to support your application with. Next slide. So if I'm using calculation 1 or 2, and recall that's either I was in business all of 2019 or part of 2019, I'm going to need to provide that application. Again, if you go through the SBA portal, that's online and electronic. Tax verification, again, online, electronic. We're going to look for your 2019 gross receipts via your filed tax returns. So you're going to need to provide your tax returns. Now, remember, we're not just looking for the front page. We're looking for the tax returns and all associated, addendums or additional forms that you submit with different schedules and those sorts of things with your tax returns. So make sure you provide a comprehensive 2019 tax return. You're also going to provide 3 months of your most recent bank statements. So if you do have your April of 2021 bank statements, then that would be your February, March, and April of 2021 bank statements you'll provide. That does 2 things for us. One is helps us validate your banking information. And number 2, it helps us validate that that is in fact the bank or the bank account within which you're conducting business for your business entity. Now, to prove gross receipts, we're looking for at least one of the following. Preferred and kind of the gold standard is federal tax returns for 2020 that have been filed for that applicant entity. Also preferred are point of sale reports. So if I do use a point of sale vendor It tracks all of my gross receipts, all of the transactions for my business. Many of them are providing specific reports that then you can use to substantiate your gross receipts for 2020. So that is a second preferred option. Use of either of these options will expedite processing of your application. We will accept, however, externally or internally prepared financial statements where you as the applicant have signed, dated, and certified as to the accuracy of those documentation. Now, the financial statements may slow down the processing and may delay review past 14 days, but be aware that that is an option if that's the only way that you can support your 2020 gross receipts. Next slide. Now, calculation 3 is a little bit more intensive. We're still asking for the application, tax verification, bank statements, but in this case, we need to see 2020 and 2021 gross receipts. Now, the preferred method for 2020 is, again, federal tax return, 2020 federal tax returns that have been filed, or 2020 federal tax returns that have been prepared but not yet filed. So that is a preferred option for those 2020 gross receipts. You can also use 2020 point of sales reports and 2020 and 2021 point of sales reports as a preferred method to support your gross receipts. Now, if you recall, you also have to provide evidence of eligible expenses. So our preferred method for that is that you provide your financial statements with a CPA comfort letter. What's a CPA comfort letter? It is basically a letter that your CPA or a CPA that you hire reviews your financial statements, assesses that they're reasonable, and writes a letter to that effect. They're not audited, they're not reviewed statements. It's just kind of, hey, from what I see, I'm comfortable with what's being represented in these financial statements. And again, that is profit and loss, balance sheet documentation to document those expenses. You're also going to want to have documentation that supports those expenses. So we're talking about things like lease statements, mortgage statements, other debt statements, utility statements, those sorts of things to substantiate those expenses you're reporting in your financial statements. Now, we will also accept, again, those internally or externally prepared financial statements that are signed, dated, and certified as to accuracy by the applicant. But it may, again, delay review past those 14 days. Next slide. And then there are two cohorts of applicants that will need to provide some additional documentation. These are either brew pubs, tasting rooms, tap rooms, breweries, wineries, distilleries, or bakeries. And what we're looking for here is evidence that on-site sales in 2019 comprised at least 33% of the 2019 gross receipts. Lots of different ways that you can substantiate that, whether it's tax and trade bureau forms, state or local forms you filed, internally created reports from inventory management, sales reporting, or accounting software. If you weren't in business, or if you opened your business in 2020, we're looking to see that your business plan contemplated at least 33% of gross receipts in on-site sales to the public. Again, what we're looking for here is that your 33% includes those on-site sales, not wholesale. So if I'm a bakery, maybe I sell some of my product in a bakery store that I run, but then I also wholesale some of my product to restaurants or grocery store. We're trying to segment out those two different types of revenue streams. The other cohort are applicants that are in. They have to document that at least 33% of their gross receipts in 2019 came from on-site sales of food and beverage. And again, if they went into business in 2020, they have to have that business plan that contemplates at least 33% of gross receipts in on-site sales of food and beverages to the public. Next slide. As you go to apply, a lot of different great resources. The first one, I know it has the call center hotline here, but The website at sba.gov/restaurants has loads of really good information, a program guide that walks step by step through all of the eligibility criteria and constraints related to the program, eligible uses of proceeds. It also has a sample application that I mentioned you can download. There's a knowledge base where if you have a question that you don't see answered, you can ask that question and it may have already been answered. So great resource. Second option is the call center hotline at 844-279-8898. This is where you can apply telephonically, but it's also where you can get technical assistance if you're having difficulty with the application portal, or you have eligibility and or other program questions related to that application. They can help you there. We'll also help you in the district office. You can reach us at illinois.do@sba.gov, and we've got staff on hand who will help you navigate the program to the best that we can. And then finally, there is help available in multiple languages should you need it. Next slide. So we talk about best practices from the standpoint of applying. The number one thing that I can mention is listed here as well is make sure you provide a complete application. Make sure that all of your documentation is full and complete. Like I mentioned, the entire tax return, not just the front page. Make sure that you verify when you put your employer ID number or your tax identification number that it's correct. Your name, your address, all of these things, you want to make sure that they're correct and accurate, because if they're not, we have to go back and forth on these things, then it's just going to slow down processing of your application. You're also going to want to leverage your resources. So that may be your CPA or your attorney, or it could be an SBA resource partner like a Small Business Development Center or SCORE. You want to take advantage of those resources to help make sure that your application is as prepared, as completely, and tells the story, if you will, as well as possible. If you do need to make corrections to your application, you will have to call the hotline. They're the only ones who can actually update the application on your behalf. And again, as I mentioned, if you still intend to apply for PPP, recommend that you either complete your application and have that approved in advance of your RRF application, or withdraw any PPP applications you may have outstanding. As Congresswoman Underwood mentioned earlier, we opened application yesterday. And as we start to review and approve the applications, we have a priority period for the first 3 weeks. During this period, only those businesses that are 51% or more owned, controlled, and managed by owners who are one of the following three groups: women, veterans, and or socially and economically disadvantaged individuals. These are the only applicants that will be funded during this first 21-day period. On day 22, every applicant will then have their applications processed and funded until all the program funds are exhausted. Next slide. As I mentioned, the priority groups, women, veterans, and or socially and economically disadvantaged individuals, you will self-certify on the application that you meet the application requirements. And one thing to note for those businesses that maybe have ownership groups of multiple owners who are involved, if in aggregate, several of the owners in aggregate, their ownership percentage, they're part of the priority groups and they meet that 51% or more ownership percentage in aggregate, they are eligible for that priority group treatment. So as an example, if I have 5 owners, each owns 20%, one's a woman, one's a veteran, one is a socially and economically disadvantaged individual, they own 60% collectively of the business entity, then they are eligible for priority group treatment. Next slide. And just for everybody's benefit, the definition of socially and economically disadvantaged individuals is really important to note. Socially disadvantaged individuals are those that have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. Now, there are members of certain groups who are presumed to be socially disadvantaged. These are Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. So they're presumed to be socially disadvantaged. There may be others who also experience social disadvantage where, they have been subjected to prejudice or cultural bias. Key here is that if you believe that you may fit in to that group, you want to be able to articulate why you believe you fit into that group. I recommend that you look at the back of the PDF of the application, as it has a full description of what social disadvantage means, and it'll give you an idea of the types of ways that you can justify your inclusion as a member of those groups. So the second part of being socially and economically disadvantaged is the economic disadvantage. And this is focused on those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. Again, very specific definitions on the back of the application. I encourage you to take a look at that. You're going to self-certify that you are both socially and economically disadvantaged if this is the category that you believe will qualify you for the priority group. Want to note that if you explore, or if you went through and reorganized your ownership for your business in order to qualify for the priority period, you will be automatically disqualified for award. So you just don't want to do that. Next slide. We did also set aside some funding to make sure that the smallest businesses are able to access funding through this program. We have $5 billion set aside for applicants with 2019 gross receipts of $500,000 or less. An additional $4 billion for those applicants with 2019 gross receipts from $500,001 to $1.5 million, and $500 million for those applicants with gross receipts of not more than $50,000. So again, really trying to set aside these funds to make sure everybody has access to this program. And that ends the slide deck. I know we pushed a lot of information. There are many questions. So look forward to answering as many of those as I can.
Bo, thank you so much. We really appreciate you being here today. Just for everyone's awareness, I'm Ashley with the Congresswoman's Office. I cover the small business portfolio. And I am going to ask Bo, we have had quite a few questions that have come into our office that are kind of frequently asked that we would love to go over with you. You covered a lot of them already, but let's see. Finding out if they qualify. So if we've got someone who really, maybe the definitions online, they're still unsure, what's the best way for them to find out if they actually qualify?
So a couple of things here. I mean, I think number one, if you have additional questions, you can always call that 844 number, and nothing is binary. So there may be businesses that fit into that gray area of not really sure. And in that case, if you think that you may be eligible, then I encourage you to go ahead and apply. And ultimately, through the review process, we will make a determination. But as long as you're making a good faith determination that you believe you are eligible, I don't see any issue with you going ahead and applying and having us make that decision.
Great. And then we have had people reach out in between yesterday and today. Do we know if the money is already gone? Should people keep applying?
Yeah, I mean, I think it's really important that people continue to apply. As of right now, I can't say for sure whether the funding has been exhausted or not, because we haven't started processing these applications yet. Or if we have, it's very much at the beginning stages of that process. But we really want to know what the need is out there as well. So by having everyone apply really helps us understand what the total need is in the community that this program is intended to serve. And so, yeah, we want you to apply, and, we'll continue to process these until funds are exhausted, but we'll also share this information for everybody who may be a relevant stakeholder, so that, there's like with PPP, who knows, there may be more funds available in the future as well, and you want to get in the queue.
Great, wonderful. And when will folks know? So say someone applied today or yesterday, what's the approximate timeline if they did so, electronically through the SBA portal?
Sure. So, a kind of ideal state is we're looking for a 14-day turnaround from application to funding. As y'all can imagine, we get a ton of applications right up front. So, that may or may not be realistic based on just pure volume, but that's what we're shooting for. As long as you're using, your application's complete and you've got the preferred documentation that you provided to support that application, that's what we're shooting for.
Great, and that's applicable for priority groups and then groups that can apply after that first 21 days, correct?
Correct, yep.
Awesome. Let's see, people have been asking what the money can be used for, but you went over that earlier. And another question that we get, and you stated it several times, but just for everyone's clarity, do restaurants need to pay this money back?
No, so this is, I don't call it a grant because you don't have to go through all the normal grant processes that we typically would have to go through for the federal government, much like if you had considered applying for the Shuttered Venue Operators Grant. That is a true grant program. This is not. This is a funding opportunity and a direct payment. So, so long as you use the funds in accordance with the program guidelines, there's no expectation that you will repay these funds.
Great. So we've had folks, they've already received PPP and EIDL. Can they still access these funds? They're a restaurant.
Yeah, absolutely. So if you've received PPP, that will be subtracted out of any funding amount that you might be eligible for. The other thing is that, as with really any of our programs, you can't use them for the same purposes at the same time. So you're just going to want to make sure that you segment out how you're using these funds versus you've used your economic injury disaster loan program funds versus the PPP funds.
Great. And then can someone apply for RRF if they have already applied for the Shuttered Venue Operators Grant Program?
You are automatically disqualified if you've applied for the SVOG.
Great. So we have folks asking which point of sale providers can they apply through? And I know that there are some other benefits that the point of sale providers are possibly able to provide documentation packages. Could you touch on that a little bit?
Yeah, sure. So my understanding is that Square and Toast are the two vendors who are providing application services through their systems. Others, and I don't have a complete list, but you can find that on our website in the knowledge base. Others are supporting the development of point of sale reports that you can use to support or to substantiate your 2020 gross receipts. I would liken this to the payroll provider reports that we accepted as part of the Paycheck Protection Program. So very similar kind of idea of, hey, these point of sale providers have all of basically your business transaction information over the entire year. So let's take advantage of that data that's already been collected and make it as easy as possible for you as a business owner to apply.
Wonderful. Okay. What if someone doesn't have all the documents that you spoke about? They just don't have some of these documents. Is there anything that they could do, or is this something they need to speak with the hotline about, trying to fill in those gaps?
Yeah, I mean, there are certain documents that would be that I would say are non-negotiable. So if you don't have 2019 taxes and you're looking to apply for calculation 1 or 2, then you wouldn't be eligible to participate. Now, that's not to say that you wouldn't be able to participate using calculation 3. It's just the expectation is that everybody who was in business is filing taxes appropriately for their business to demonstrate that gross receipts. And it also helps us make sure that that's an actual like real business. Other documentation, I mean, I think what we try to do is give options. So if, for example, you're looking at, even those internally or externally developed financial statements, those sorts of things, almost any business that's going to apply is going to need to be able to provide that. And if you were having issues with that, what I would recommend is that either you contact an accountant or you go to one of SBA's resource partners, the Small Business Development Centers or SCORE, to help you pull that information together. Ultimately, any business is really required to document all of their transactions for their business and then report any, whether you are, for your business, whether you've experienced a profit or a loss, you still need to file tax returns to document all of the activity. Typically, different state and local also require you to file information related to your business. So you're still going to have to pull that together. There's not really an option if you don't have any of that information for you to apply and be approved for this program.
Great. Okay, let's see, just a few more. So we've had folks, is there anything that they can do to make their application stand out? We've got businesses that, say without this funding, they'll go under. Is there anything that they could do to stand out in the application process?
Yeah, so this, unlike a kind of normal grant process, this isn't a competitive grant, right? So the best thing that you can do is have a complete application and get your application in as quickly as possible, because it is first in, first out based on your priority group and all of that. So best thing you can do is get that in there as quickly as possible, make sure that your information's correct and accurate, and then hopefully the funding lasts long enough until it gets to you. Great.
Yeah, and I know you listed that in your best practices slide as well. One last question about the RRF. Can my accountant fill this out for me?
So conceivably, you could create a registration in the system and then work with your accountant to go through and fill out the application. However, at the end of the application, it has to be the individual who's authorized to sign on behalf of that organization. And that includes the 4506T tax transcript as well. If you look at the instructions on that, you actually have to file with the IRS to establish someone as an agent essentially on your behalf. So they may be able to fill it out for you, but ultimately you as the business owner are responsible for going and signing the documentation that you're submitting.
Great. Wonderful. Well, that is all the questions that we've received ahead of time, and I am not seeing any in the Facebook comments. But for our small businesses on here that are not restaurants, Bo, could you remind them of the upcoming deadline for PPP?
Yeah, absolutely. So the Paycheck Protection Program expires for application on May 31st of this year. So you're going to want to move as quickly as possible. I would even say, I believe that, the funding may or may not last all the way to May 31st. So really behoove you to find your lender, get that application in as soon as possible, and not wait until the very last second to put your application in for that program.
Great, wonderful. And just as a reminder for everyone, the SBA's general website is sba.gov. The application for the Restaurant Revitalization Fund is restaurants.sba.gov. Bo, do you have any final thoughts or parting words for our restaurants in the Illinois 14th?
Yeah, I think As with any program, again, it seems like it's a little bit overwhelming, but know that we're looking at these applications holistically. A human being will look at every single application. So, do your best to tell your story as you put your documentation into the system. Make sure that you feel like the financial information that you're conveying is very clear, and but just, I guess, know that our goal is to help as many businesses as possible. We're not looking to exclude people. So put your best foot forward, but know that we're trying to do our best to be reasonable as we review these applications. And if you make a small error, that's not necessarily going to totally disqualify you in the process.
Wonderful. Well, Bo, thank you so much for being here. I know the Congresswoman and all of our constituents really appreciate you taking time out of your day. And just like the Congresswoman mentioned earlier, our office, Congresswoman Underwood's office, is also able to assist in a number of ways. So we can answer some of your questions about the application, direct you to information, or if you've got questions for other federal agencies, we can inquire on those as well, the IRS, immigration, and again, SBA, if you've got outstanding applications or questions that you've got on other programs, we can assist with that as well. So our office can be reached at 630-549-2190 or online at underwood.house.gov. So feel free to reach out to us there. And again, Bo, thank you so much. We really appreciate you being here today.
Thanks again for having me. I appreciate it, Ashley.
Have a good day, everyone. Stay safe.